Hey everyone, welcome back to the channel. So in this video, I want to go over Altisource Portfolio Solutions third quarter results. It came out last week and I just realized I never made a video about it. So this is going to be an update for that company. And for them, not really a whole lot to talk about. They brought in revenue of 85.4 million. They had a pre-tax loss of 1.4 million. And they had EBITDA of positive 6.4 million. So more of the status quo for this company. Nothing really big happened. Yes, they've lost money again, but that is to be expected with the environment we're in. In terms of what their liquidity looks like, they ended the third quarter with $67 million of cash and 30 million of investment in equity securities. Part of that was they owned a part of Front Yard Residential Corporation, Resi Stock, which was bought out for $13.50 a share. So the company made a nice profit on their investment in that company. And they did say that they're going to use the net proceeds to repay a portion of the debt, which is a good thing. So here's the earnings transcript, and we have the CEO talk about a few interesting things about the company. Now here's a paragraph talking about how the government's restrictions on foreclosures impacted the business, where there's a data report that showed that foreclosure initiations were 83% lower for April through August of 2020 compared to the same period last year. But there was an 87% growth of non-current mortgages. So people that currently aren't paying has spiked. However, number of foreclosures has gone down. And because of that, they think late 2021 into 2022, that's going to be the sweet spot for this company where we do see these mortgages start coming due and these people aren't going to be protected anymore. And so that's probably the time where we're going to see foreclosures start to tick up. Here he talks about how delinquency rates affects the company. So this company is very sensitive to changes in delinquency rates. For just a 1% increase in the delinquency rate, the addressable market for the company increases by 700 million. If you take a look at their market cap, that's around their market cap. So like I've said, all that needs to happen is the delinquency rate just to tick up a couple of percent, and I think the stock will perform very well. And so obviously, since these foreclosures haven't been happening, they have an extremely large backlog of the business. And again, they said they have significant revenue tailwinds beginning late 2021 into early 2022, when they anticipate the default market is likely to return to a more normal operating environment. So again, this was the reason I invested in the stock in the first place. This was the thesis that there's going to be a huge demand for the services of Altisource once people are starting to be foreclosed on their mortgages. That's where Altisource is going to step in. I think if delinquencies tick up a couple of percent, which seems extremely likely, then Altisource will have a ton of business coming their way, and that will result in a very good performance for the company. So in terms of Q&A, not many questions during the conference call. One of them asked about the timing of the lifting of the moratoriums, and the CEO answered that most of the foreclosure and eviction moratoriums extend through the end of this year, so the end of 2020. And even mortgage servicers that don't have to abide by this, they're still doing it. They're still staying in line with the government regulations, even though they don't have to. So it's really at the end of this year, we'll begin to see what the real damage in the housing market looks like. And then on top of that, they also have forbearance plans, which could extend up to another year. So that's why this company is saying late 2021 into 2022 is where we're really going to see what ends up happening with the housing market and if the stock will perform how I'm potentially expecting it to. And another interesting thing the CEO talks about is how last time this year, delinquency rates were at historic lows, and that, once these government programs roll off, the delinquency rates are going to be significantly higher than they were last year. I don't think there's any doubt about that. And the fact is, right now they're not doing any foreclosure, so even if they were just at the level of 2019, it would still be a benefit for this company. And in that case, I would still see upside for the stock based on the current price. And then another question talking about right now, there's around 2.4 million in seriously delinquent mortgages, and the CEO, William Shepro, estimates that around 25% to 50% of these borrowers may end up in some sort of loss mitigation. So just because someone's defaulted and is in danger of being foreclosed on doesn't mean they're going to do it. Oftentimes they come to an agreement with the lender and they're able to work something out. But for some percentage of those seriously delinquent mortgages, there are going to be some that just can't be worked out and they're going to go through the foreclosure process. And a big chunk of those will, which will help this company. So if we take a look at what the stock price is doing, reacting to these earnings results, nothing really changed. Again, it was from a couple of days ago, so a few days back was when the earnings was announced, and really not much movement for the stock. We had a drop before the earnings, but ever since the earnings, we've been holding pretty steady at around $11. So right now, all is good with the stock. Not really any news on the earnings call, but for this company, no news is good news for now. Obviously worst case, they could have problems with their debt and liquidity, but they're doing a good job keeping those in check. So now it's just a waiting game until we see foreclosures start to tick up, and that's when we'll see what this company can really do. Again, I still think there's an enormous potential for this stock if the housing market does what I think it's going to do. And even if it doesn't, right, even if the foreclosures are a fraction of what they were back in the 2008 housing crash, this stock will still do very well for reasons I talk about in my initial analysis of the stock, which I'll put a card up to right now if you want to watch it. So I'm not selling any of the stock. I'm waiting. This is one to be patient for. Like I said, it's going to be 2021, 2022 until we really see any sort of real movement for this company. So even though I do think the stock could go up 1,000%, it's not going to happen in a year. It's going to take 2, 3, 4, 5 years for that to fully play out. So I'm not selling any stock here. In terms of buying more, if the stock does dip down under $10 again, I will buy some more. I think that is a very good price for the company. And at that price, there's very little downside. Even if foreclosure rates just go back to 2019 levels, I think at $10 per share for this company, I still think that the stock is undervalued based on those levels. So that's it for this video. Just wanted to make a quick update for you guys on Altisource stock, their third quarter earnings results. Let me know in the comments if you're holding the stock and how you think the housing market will perform next year and going into 2022. Will we see a large uptick in foreclosures, or will it be much of the same as this year? Let me know down in the comments. So that's it for this video. If you liked it, hit the like button to help out my channel. Subscribe if this is your first time watching one of my videos. So that's it for now, and I'll see you on the next one.